In today's video, I'm going to review Blue Owl Capital Corporation that pays high dividend of over 9%. Several criteria we'll look into that shows the stock will continue to pay out high core dividends and to have robust growth. If you're looking for a passive income stock, then this is a stock you may want to look into. Blue Owl Capital Corporation is a public traded business development company that provides secure loans to development stage companies. And they're located in the United States with a market cap range of $10 to $250 million. The fund strategy is to focus on businesses, services, pharma and healthcare technology, aerospace and defense, software and technology areas. Those core areas will continue to have major growth within the next decade into the future, which in return will support Blue Owl investment strategy for continued growth. Now let's look at the EPS of Blue Owl. First, just a quick review of some of you watching that may not know what EPS is. EPS is earnings per share. It's a company net profit divided by the number of common shares it has outstanding. EPS indicates how much money any company makes for each share of its stock and is widely used metric for estimating corporate value. High earnings per share typically means that a company is more likely to have extra profit to distribute to its shareholders as dividends. Avoid stock that shows a negative EPS. Blue Owl EPS currently is $1.59. That tells us that the stock is profitable and will continue to do so and provide dividends. Now let's jump into the Blue Owl PE ratio. First, just a quick review for some of you watching that don't know what PE is. PE ratio is a measure of price per earning is the company's net. The price to earning ratio relates to a company's share price to its earning per share. A high PE ratio usually means that the company stock is undervalued or overvalued. And a low PE means the opposite. A PE ratio above 0 means the company is profitable. PE ratio below 15 are considered low and ratio above 15 are considered high. Typically, the average PE ratio is around 20 to 25. Anything below that would be considered a good price to earnings ratio, whereas anything above that is considered a worse PE ratio. Different industry can have different average PE ratio. So let's jump into Blue Owl current PE ratio is 8.9. That tells the stock is undervalued and good time, and it is a good time to buy the stock. Now let's look at the intrinsic value of Blue Owl. Again, a quick review of some of you watching that may not know what is intrinsic value of a stock. So to determine the intrinsic value of a stock, we use the cash flow of a company or stock to determine the worth value of the asset, stock, or bond of a company. This intrinsic value may or may not be similar to the current market value of the stock. Market value is the current price of a company stock. Intrinsic value is the sum of all the company asset minus its liabilities. If the market price is below that value, it may be a good time to buy. If above, it's time to sell. Consider a good sale. To determine the intrinsic value of stock, I use an intrinsic value calculator that incorporates the golden growth model. Taking the average current dividend of 4 years divided by the expected return on investment minus the average dividend growth of 4 years. So after putting all the information data into the intrinsic value, the intrinsic value of Blue Owl is $18.16. The current stock price of Blue Owl after this content making is $14.15. A difference of $4.01. That tells you that the stock is a buy. Looking at the stock price history, Blue Owl looks like it's at a good price. If you use an intrinsic value calculator and add the margin of safety of 25%, at $13.62, Blue Owl is not at a bargain price. So if you add a margin of safety 25%, it's not a good price. Next, let's research the company for news related to the company. News that may impact its future performance or stock price. On July 15, the assets manager touts robust AMU gains. That's good news for the company's future performance. Company rebrands from Owl Rock Capital to Blue Owl Capital Corporation. Name change only and doesn't look like it will affect the day-to-day operation. Hence the company performance much. But with the current news, it doesn't seem like there's much that will affect the company's future performance. So we're good there. Now let's jump into the dividend payout history. Blue Owl payouts quarterly dividend. Looking at its dividend history, it has a strong, solid, and consistent track record of paying out its dividends. plus several bonus dividend payout for this year alone. Notice that it looks like it will continue to do so into the future. Now we will look at Blue Owl Financial. To support the continued dividend payout, we must look at the financial part of Blue Owl. Looking at Blue Owl Finance's total revenue looked like it totaled steady and declined a bit from 2021 to 2022, but increases back up to this year. Total asset and debt shows the company continued to grow its asset year over year. Its debt year over year is increasing, but with the growth in the asset year over year, this will help it balance endure the debt year over year increase. Cash flow shows the company's net positive cash flow for the year. This is the area where the company is showing its strength and could eventually add value to the stock price and future dividend payout. A good, healthy company with positive cash flow is a good investment. Let's look at the company insider buying. Let's first discuss what is insider buying and why do we look into it. Insider buying is the purchase of shares in a corporation by a director, officer, or executive within the company. It is not the same as insider trading, which refers to corporation insider buying or selling shares based on material non-public information. Inside buying shows the management confidence in the company and is considered a bullish sign and may view the stock as a bargain. If an insider increases stake in the company, the insider believes the company's stock price will rise in the future, showing sign of confidence in the company growth and earnings. Or it's possible for the merger of an acquisition in the future, or simply because they think their stock is undervalued. Blue Owl has a strong inside buy within the last 12 months and no sell. It shows shares bought from director and officer of the company. It also shows a high number of shares held by them. With this two information, the chance of the company's stock will rise in the future and continue to pay and supports high dividend yield shows signs of confidence in the company growth and earnings. Let's look at the option volume of Blue Owl. You may ask, why will you look at the option volume of the stock? The put-call option volume ratio can predict the direction of a stock direction and can show the amount of interest in the stock. An extreme high put-call ratio means the market is extremely bearish. The opposite is true for an extreme high call put-call ratio. Blue Owl call option doesn't have much going on. Currently, there are only 2 call options out there. This translates into what? Bullish outlook for the stock. So pretty quiet there. Not much going on. Let's talk about a little bit about the dividend on the tax. Dividends are not considered passive income by the IRS and are taxed as ordinary income. However, qualified dividends are taxed at the more favorable capital gain rates. Non-qualified dividends are taxed at regular income and are subject to the same rate as the personal federal income tax rate, range from 10 to 37%. Blue Owl is considered qualified dividend because it pays out quarterly dividends. Over time, a quarterly dividend will compound and grow faster compared to a yearly dividend payout stocks. In this chart, Blue Owl is calculated with the DRIP calculator. The DRIP calculator automatically uses the dividend generated to purchase more of the same stock. The calculator generates the DRIP result compared to monthly, quarterly, and yearly dividend payouts. As you can see, the quarterly dividend grows aggressively when the dividends are dripped back into the stock. With all the information that is provided, the content is for education, reference, and entertainment purpose only. All investment involve risks, including the possibility of loss of principal, and might not be suitable for all investors. I'm going to end with the tip here. Don't focus too much on budgeting. Instead, focus on cash flow planning, meaning focus on growing your income. Invest and let dividends help you achieve that cash flow while you sleep. I hope you found value with me sharing this with you, and take care until next time. Bye now.